All right, good afternoon, everyone. Or it could be morning, or it could be evening, I guess, depends on where you are. If you don't mind, let's just test the audio here. Make sure you see the slide. You probably see some video as well, a couple of bright and shiny faces. Don't mind, just type a Y in the question box and go to. And just let me know that you can see and hear okay. All right, yes. Captain Ray, Scott. Okay, welcome. All right, perfect. All right, fantastic. All right, so let's get right into it. Welcome to today's exclusive webinar hosted by FFR Trading. I'm John Matteson, the VP of Marketing here at FFR Trading, and I'm thrilled, and we're thrilled to have you here with us. We've got an incredible session lined up today featuring the legendary Turtles Commodities program, proven trend-following strategy rooted in one of the most fascinating stories in trading history. So here's what we're going to cover today. Obviously, the risk disclosure. We'll do a little review of who we are at FFR Trading and what our role is here. We'll get into a history of the Turtles, if you don't know, a great story, and our involvement here at FFR with the Turtles, how that came about. And then we'll get into the program itself. I'll introduce you to the program manager, Jeff Davis, and we'll look at some accounts, some success stories that we've had here with the Turtles, and actually interview one of the current Turtles subscribers, and then go over the details of the course and the program and everything that comes with it. So the risk disclosure, you should all be familiar with. You know, trading involves risks. It's not suitable for all traders and investors. Past performance is not indicative of future results. And please speak with a qualified strategist to determine if this program is right for you. To kick things off, I'd like to introduce Michael McGinnis. He's the president and CEO of FFR Trading. He's really the reason we're all here. Michael's helped thousands of traders find and implement strategies that fit their goals, and he's a huge supporter of the Turtles Commodities program. So, Michael, welcome to the webinar here. And maybe if you could talk a little bit about, since this is your baby, a little bit about FFR Trading and what our role here is.
Yeah, thanks, John. I appreciate it. And then I just want to welcome everybody. I know all of you are, here globally from out of the country in different states. So thanks for waking up or taking some time away from the markets. I know the markets have been a little chaotic lately, and I know it's kind of hard to keep your eye off those. But for the next hour, let's, we're going to have some fun. And hopefully all of you that are on the webinar today, you're going to learn a little bit about, a little bit more about us and then the Turtle strategy, okay? So, so FFR Trading, we have actually been around since 2006. So we're coming up on our 20-year anniversary. And so we're all pretty excited about that. And for a company to be in business going on 20 years, we got to be doing something right. So our main focus is working with professional programs and traders and aligning those programs, traders, and systems with the individual investor and our clients. And what our clients typically are looking for are strategies that are real, successful, and we try to find the best strategy that fits their suitability, that's been working over the last couple of years, and also what's been working in the current market climate. And we have about 8 going on 9. We have another trader that we're currently right now in the vetting process and going through his track record and strategies. But we have about 8 to 9 different traders that we currently work with. They're all fantastic. The one thing that I really love about aligning ourselves with and being able to align ourselves and pick and choose who we work with is that I want to work with somebody that has a vested interest and also has an interest in their clients and making sure they're retaining the client's business as well. All of our traders are fantastic. They're great to get along with. And when they take losses in the market, which all traders do, they're devastated. They're devastated on their own accounts, but they're devastated because they know their clientele is taking those same losses. And that shows that our traders really care. They care about what they're attempting to accomplish and making sure that they help our clients see success. So same goals for us with every single clientele that we have is your success and your retention. If we can show you success in the market, over the long term, what we'll end up doing is retaining your business. And we do have some clients that's been with us for over a decade. And we'll preview some of those here within our meeting today in our webinar event. So go back to that last slide, John, real quick, because most of you, if you're new to FFR, you might not know our process, but we do have a very, very detailed process. And these 5 bullet points that we showcase here gives you just a brief overview. But we literally have an 8-step certification process. Most of you out there that are retail investors, you have your own research that you do, your step-by-step research, and some of you may not have any step-by-step research and know how to do proper due diligence on specific traders. And so your go-to source is Google. And Google can be great, but Google can also be our worst enemy because you end up down several different rabbit holes and you don't know what's real and what's factual and what's fake and what's not. And so our process is much more in depth than that. Every single one of our traders is referred to us by a reputable third-party source, somebody that we are very familiar with that's been in this industry for 20, 30 years. On top of that, when I meet or we meet a new trader, we go through a vetting process. That vetting process, the first is just a call. And that call is very in-depth, getting to know you and finding out if it's going to be a good fit. And if I feel their strategies and their trading methodology is going to be right for our clientele. From there, we then look at their history of trades. We look at their back test. We actually go through and look them up if they were previously registered with a governing agency, whether it be FINRA or the NFA or the SEC. We go through a full background check there. We have a couple of attorneys that work with me that are from that industry that used to work with the governing agency from the SEC as well as the CFTC. So we have some means to do some thorough background checks on these individual traders. And when we align ourselves with these traders, it's also really making sure that we provide a real strategy that is going to be successful for our clientele. And these traders are also looking, they trade, they also sell various different educational components through different resources like publishers, like TradeWinds Publishing is another big publisher that publishes a lot of books and DVDs and entry-level systems from a lot of our traders that we work with. And that's just to give, send out a reach to you as, hey, my name's, hey, this is the Turtles, or my name's Ian Cooper, or my name's, Joe Duffy, Wendy Kirkland, Chuck Hughes. Those are all some of the traders that are in our wheelhouse. Keith Harwood is another one. So they sell a lot of that education through TradeWinds Publishing to get to know you and introduce you to them. Once you sign up with one of those products, your name is sent to us. But the thing of it is, what I want to cover here is that we want to make sure that our traders have a vested interest in really, really trading and making money for our clientele and seeing success. And so this is a business relationship that me and the traders have. And it's outside of being an individual. This gives the traders another resource of income outside of their trading account. And why not, in this industry, if you can? It's like, any other professional, whether you're Warren Buffett or even if you're, any other individual that sells programs or opportunities or webinars or seminars to go to. It's another source of income for them. So you can go to the next slide. My company is, I'd like to call us a boutique vetting firm. We have about 15 different individuals that work with us. mostly in our remote offices, or a lot of them work straight from home in today's day and age. And the computer generation, we have so many different applications. So a lot of these individuals, our clientele, are talking with a lot of our strategy development team members, or marketing individuals. John's one of my marketing managers here that's been with me for well over, I don't know, before what, 2019 is when you started with me, John. So yeah, so you'll meet some of these individuals. So that's our company. We're here to help you and align you with the right strategy that's going to help propel your portfolio. And today, for a lot of you, and I want to, before you jump into the history, John, because John's going to go over the history of the turtles, a lot of you are going to be options traders, okay? And then what we're going to be talking about today is going to be futures. And if you don't, or you're not familiar with a certain market, it can be a little bit scary. I'm sure when you're diving into options trading for the first time, it was a little scary until you went through the learning process and figured out that options really weren't that bad. Sometimes trading straight stocks can be one of the most risky investments, especially with what's going on now, what we saw back in 2008, and even during the pandemic year. Some of those conservative investments you think are conservative end up being the most risky. Well, futures is giving you, especially all of you options and stock traders, the ability to diversify in an uncorrelated fashion. A market that's not really driven by news-related events regarding certain stocks. So when the Dow Jones and the S&P and NASDAQ and so forth and so on are moving because of news-related resources on stocks and what's going on within the United States and globally, commodities aren't really as affected. In fact, we've seen some of our biggest years with the Turtles system trading futures on the short side, and where we've been able to capture 2, 3, 4, even 500% return. And that's what we did in the pandemic. We'll be going over that today as well. So just sit back, relax, watch the webinar. You're going to learn something, and it's going to give you the ability, if you're not familiar with futures and commodities, that's something that we can hold your hand on, but it's going to give you a hedge in the market with what you are trading. Another area where you can seek success. All right. So, John, you want to talk about the story of the Turtles?
Yeah, first, great background information on the company, Michael. I really appreciate it, and I hope the folks out there really appreciate, like you said, all the due diligence and the homework that we do on the kind of the back end to bring you these great programs like the Turtles. So let's talk about the Turtles. Some of you may have seen a movie many years ago, or you can probably catch it on Netflix or cable still, called Trading Places with Eddie Murphy and Dan Aykroyd. What most people don't realize is that story was loosely based on a true story, and that is the turtle story. This goes back to the 1980s, so we got to go back away, where there were two traders, Richard Dennis and Bill Eckhart, and they had developed a strategy, what became known as the Turtles trading strategy, to trade the commodity markets. Didn't have money, ended up borrowing $400 from Richard's family, and they started trading, and they turned that $400 family loan into well over $200 million in just 5 years. Well, Richard Dennis believed that he could teach anybody his strategy, literally take somebody off the street, teach them his strategy, and they could be successful traders too. Well,
hey, John, you want to click to that next slide?
Oh, yeah, apologize, yeah.
Yeah, that's okay, sorry about that. Yeah, there you go.
So, his partner, Bill Eckhart, said, you are unique, not anybody can just, do this. Not everybody's built to be a trader. And so they had this kind of nature versus nurture debate, apparently in front of a turtle pond in Singapore. And Richard, I guess, turned to his partner and said, look, I could farm turtles like they farm, I could farm traders like I could farm turtles out of this pond here in Singapore. And they ended up putting an ad out in the Wall Street Journal. They invited anybody, off the street to come and learn how to be a trader. The first class, they picked 14 people, right? People, all different backgrounds, no experience with trading, taught him his strategy, all his rules, and then handed them $1 million to start trading with, and they famously turned that million into hundreds of millions of dollars. it's just an amazing story. Well, one of those original 14 traders was a fellow by the name of Russell Sands. Now, Russell ties into us here at FFR Trading, and I think Michael will kind of go into that story with you here and kind of introduce some of the team, how one of the original Turtle traders basically started our Turtles Commodities program here at FFR. So, Michael, maybe you want to get into the background of some of the team here.
Yeah, so when I first got into this industry, it was before I started FFR Trading, and I met Russell, and he was a very unique individual. Some of you, I don't know if any of you on this webinar today have ever met Russell in a seminar setting or in person. He was very flamboyant. He liked to bolster his wealth, so to speak. And he was, he was this 5'6". He was a little bit taller than me. I'm 5'4". He was a little bit taller than me, 5'6", 5'8", but he had his shirt unbuttoned, and he had the Star of David, and he walked in the room like he owned it. And he was just such a unique individual. And I've heard, various different versions of the Turtle story, but his was very unique because he firsthand, he told me what he went through and how he became a turtle. I mean, Russell he was a city cab driver, and he was a professional backgammon player, and something that he would have never have told anybody, but he was banned from most of the casinos in Vegas and in New Jersey because he had this memory of counting cards. And so it was pretty unique, his story. He was very wealthy. He made a lot of money. He traveled all over the globe and teaching his version. He took Richard Dennis's version of the Turtles, which is a very basic version of how to trade commodities, and it had big drawdowns, and it also had the ability to make big money as well. But Russell added various different money management and trading rules involved with this, with his coders. Steve Charpentier was his partner. Jeff Davis, who's actually, you can see his picture here, and then also Dwayne Davis. They were all part of the Turtles money management rules and providing new code to be able to fine tune the system in the various different commodity markets that it trades. At one time, it was trading over 50. It's a little bit above 40 commodities right now that's in the portfolio, which we'll go over here in a minute. But Russell was a very unique individual, same with Steve, but the whole Turtles team is just, they're geniuses. It was phenomenal in what they've created, and that system that I started trading and started working with back when we started our business in 2006, there's been some variations and changes and improvements over that period of time, but that system has tested the time of all the different market climates and has been very successful. And then we'll dive into it from there. But yeah, it's been phenomenal. Russell and the team is great, and you'll hear from Jeff Davis. He'll be on the meeting today, going through some of the dynamics of the orders and how those are sent out. So, so next, John, we have reviewing the trading academics. Do you want to go through that section?
Yeah, so let's just review some of the academics of the program, and then Michael, you'll go through some of the basket sizing, so you get an idea of how that works.
Yep.
So just kind of a basic overview of the service. When you become a subscriber, you will receive a welcome email that's going to describe all the details and the breakdown of the service. Obviously, you get the direct alerts to your email. Those alerts are sent out at 5 p.m. Eastern time for the next trading day. So you have plenty of lead time to get those trades in. You also get all the education that comes with the program on the methodology, describing the entry rules, the exit rules, how the Turtles trade futures and futures commodities. There's a 400-page manual and videos with Russell Sands actually teaching you the strategy from a seminar he did in Australia. For those that don't have the time or the wherewithal to trade this themselves, we do offer third-party registered brokers. These are brokers that have been working with the Turtles for many years, executing the trades on the behalf of clients. So that's an option if you don't have the time management available to do this yourself. And of course, you get access to us here at FFR Trading and our team, who you've kind of met, and Michael did a great job of explaining what it is that we do here.
Hey, John,
and we're, yeah.
real quick, before you move on to the next slide here, I do want to touch on the last two bullet points here for everybody. So a lot of our options traders and clients that we have here with us, and we're in 15 different countries. We've been servicing over 3,000 clients globally. But a lot of our options traders, they don't really understand the commodities market or don't really have time to trade this particular strategy. So typically what I've noticed is that they will trade their options programs on their own through their own time because they have the time to be able to manage that. And they'll set up an account at a third-party broker. The brokers that are out there have been actually trading the Turtle strategy for a decade, and a couple of them have been trading it. One of them has been trading it, which is RJ O'Brien, for 2 decades. So there's an introducing broker, and then there's the actual clearing broker. You don't pay any more commission fees for that, but it is actually, you get a better commission fee by going through the introducing broker, and they have access to the clearing broker's platform. We're not here recommending any brokers. We're just letting you know that there's a few brokers out there. There's Dorman Trading, there's StoneX, AGT Futures, there's also Zytrade, Fox Trading Group, and RJ O'Brien that are all set up and have been trading the system, like I said, for a decade or 2 decades. It's been phenomenal. But that is the ability. It's through what they call a letter of direction. So you just contact the broker, let them know you have this service, and then they authorize that you do, and then once they do, they end up just trading the service for you on behalf of the Turtle signals and the alerts. So it's all done for you. You have complete access to the account. You can stop trading, add money, move your baskets up, take markets out. That's in your full control, but it is being traded for you according to the Turtle rules. Our role here with FFR, once you are our client, we want follow-ups with you as a client. We want communication flow to help you navigate the different markets. If some strategy is going through some drawdown and losses, we want to be part of that with you. Maybe it's something that we pause, put on the side, sit on the sidelines, let the trader go through their drawdown. They typically have to go through the drawdown because they want to get their data. And so if they need to make any changes to their system, they trade through it. But clients that are trading the strategies, they don't have to. If the markets are pretty volatile and they get a little scary, it's okay. Sit on the sidelines. That's okay too. But we're here to help you navigate that as our client. So every month we ask of our clients in coming aboard with a partnership is that we're partnering together. We're looking for good clients that are here to help themselves hit their trading goals, just like you're looking for good strategies to help you improve your trading and see better returns. So it's a mutual understanding. So let us help you. Send your statements in, that's all we ask, and then meet with us once a month or once a quarter. But it is something that we want to be a part of to help you through your journey. And we are here for the support team for Turtles as well. All right, so I just want to touch on those 2 points.
No, perfect. And that leads us into the academic discussion of the guidelines of the program. The Turtles are trading over 40 different futures contracts from energies and metals, the ags, livestock, the index futures, your Dow, your NASDAQ, your S&P, interest rate futures and currency futures as well. And if you've done any study on the Turtles, it's a lot of deals with volatility, and when it gets a clear direction, whether it's bullish or bearish, they go both ways. They tend to capitalize or try to capitalize on those trends while creating some large gains. They use sound money management to mitigate any losses on the downside there. They use many different indicators. There's 21-day bar charts they're utilizing, channel breakouts to determine the average true range or normalization of the market, using a 15-day moving average to enter and a 21-day moving average to exit. Again, a lot of work with the daily true range or average true range. Gives them the measure and the size of the strength of a particular market and trend. They'll hold positions between 2 to 4 weeks, sometimes longer if they hit a big trend or a breakout. I remember lumber during COVID was a big mover that lasted. I think we had one recently in cocoa that Michael might show you later. But it is a system, so it is a mechanical rules-based system that has specific entry and exit rules, money management rules in place while in the market, stops, that's trailing stops, all part of the all critical and part of the strategy. Everything is built in. The system has many different portfolio-sized commodity baskets, and Michael's going to talk about those different baskets, but they allow you to have different amounts of capital that you want to put to work. What commodity should you trade? So they've done a lot of research, a lot of homework, the Turtles have, to determine, depending on the amount of capital you have to put to work, what basket size or which commodity should you be trading. So if we want to take a look, so Michael, if you want to go through the baskets, and you can just tell me which slide you want me to move to.
Perfect, yeah. So first off, everybody, all of these basket sizes are discretionary to the clientele, whether you're self-trading, because you get all the rules, the methodology, and the alerts. If you're self-trading it, you have the discretion to trade whatever market you want. These are merely just suggestions from the Turtles due to their research. They've done extensive testing. They use a TradeStation file. They've ran various different scenarios with all of these different markets. They've identified about 40 different commodity markets that trend very well according to the Turtle rules. And from those, they've broken those 40 markets down into various different portfolio basket sizing according to account sizes. And that's purely due to markets that trend very well together. You gotta take in regards to the margin requirements per market that you'll need to cover the contracts. Also, giving you diversification in various different areas, whether it's softs, currencies. You're talking about energies, the index markets, treasury notes. So you're giving a vast number of, just within your basket size, a vast number of variations of diversification. So the Turtles, when they do set up these basket sizes, it's very rare, very, very rare that we would be in all, or Turtles would be in all of, say we take the 9 market basket, for instance. In all 9 markets, it's very rare that the Turtles would have all 9 of those trades on at the same exact time, because they're not all trending and they don't hit their entry indicators on their average true range all at the same time. So when we do have clients that come aboard, we do let the clients know, like say if we're starting with the 4 market basket, corn, 5-year notes, nat gas, mini, and sugar, don't start with the bare minimum. Give yourself a little bit of a buffer, because if you do take a loss out of the gate, like say we take a loss on corn and you drop down below 20,000, you should probably take a market out, because now you're taking on a little bit too much risk. But it does give you a buffer. Most of the margin in here is only about half of what the required account size is here. So, but when you buy a futures contract, say the margin on corn is, I don't know what the margin on corn is, maybe you don't, John, but say it's $1,000. $1,000 is going to come out of your account, and then a bushel of corn is going to be a certain dollar amount per point that it moves. So there's going to be a stop on your position. Once the corn goes up, say we're long corn and we go up, a couple of points, and say corn is, $10 a bushel, then you make $20. $20 goes into your account, $1,000 goes back in for the contract, and that trade is done once we've closed the trade. Opposite effect too on the loss, all right? So, but all of these basket sizes, you know, you do have the ability, we do have clients that start with the 6 market basket that's been trading gold on their own for several years, and they're very familiar with gold. So they add gold into their 6 markets, as long as it doesn't over leverage their account. You don't want to trade a $30,000 account and, John, go flip to the next slide, and start trading, say, the 15 market basket, because you're just going to be over leveraged, and that's going to be too much risk. Okay, so these are all according to the Turtles probability studies and extensive research over the last 30 years. Now, the basket sizes, the Turtles, there's really, like John said when he was going over the rules of the system, it's 100% mechanical and rule-based, which is great. It takes the emotion out of trading, and that's why the system has done so well over the years. The Turtles, they do have discretionary input. During COVID, everybody knows what happened during the pandemic year. That was a very rare year, and we were in a lot, I would say 80 to 90% of some of these positions, but like every one of the positions, almost every one of the positions at that time were in positive profits. Some of the accounts during that period of time, depending on their portfolio basket, saw anywhere from 200% return all the way up to close to 600–700% return during that year. It was a phenomenal year and a very rare year, but because of the risk that happened that year and these markets becoming too volatile, the Turtles changed up the basket sizing. Go back to the previous slide, John. On the 4 market basket, that didn't exist pre-COVID. Back in 2019, this was the 6 market basket, and it also included lumber. So when the risk was too high, Turtles recategorized their baskets and made sure that the clients were safe trading those specific markets. In fact, they just recently, this week, retooled the basket sizes again. The 4 market basket, you could start with a $15,000 account. You still can, but this is just a suggestion. You need about 20,000 to be a little bit more conservative or safer as far as taking on the risk. They also, back when Turtles originally was formulated, they used to trade on the index markets, the big contracts. Too much risk, they reduced that down and they started trading the mini contracts. And now this week, because of all the risk that's been going on with the index markets, the NASDAQ, and it'll tell you right here, the Dow Jones, the S&P and the Nikkei, those markets are now, we're trading the micros. We're trading 5 micros to reduce our overall exposure and risk. So the Turtles, they do have some discretion when it's necessary to retool the basket sizes. And that's all due to making sure that everybody is protected and in a safe, so-called, what you call safe, if there is that word in trading, right? Safe zone for your account size. So, but you can flip through these markets, portfolio sizes and baskets, go all the way up to 38 markets. Go ahead, John, you can flip all the way up to 21. We have a lot of clients trading the 21, the 26, 33 markets, and all the way up to 38. And then when you get above 38, that's when you're going to look at taking on a few other markets like live cattle, Mexican peso, palladium, what we call our exotic markets that have a lot of volatility. So the Turtles, back during COVID, when they were trading their $1 million portfolio, they were trading all 50 markets. That system, it saw some extreme volatility. We saw about 30–40% drawdown during that period of time, but during COVID, it ended up seeing a 250% return trading all 50 markets. Some of the other clients trading the 6, 9, 12, 15, 18 markets, their accounts saw upwards to 2, 3, 4, 5, 800% return. So because we're primarily short those trends. Same thing in 2008 and kind of the same situation that's going on right now in the market, you know, and we'll show you that here with some, because we are going to bring in some live accounts that I'm going to go over with you here in a minute. Okay, go right ahead, John.
Okay. So I guess this is a good point maybe to bring in some of those statements you're talking about, Michael.
Yeah, I pulled 3 statements from some of our clients that are trading, and they're going to be all 3. And I just want you to know, and I'll take over control here and show you my screen. But the 3 statements are going to be based on show my screen. Okay, I think it's this one. Okay. All right. And it looks like, let's see here, which screen are you? I need to share.
The Google, yeah, your browser screen there.
Yeah, I know. I need to switch it over to the other screen. Hold on a second. If I want to switch screens, John, how do I do that on this side of it?
Yeah, so just go to the top where it says show screen, and there's a little drop down there. And you can choose.
Thanks everybody. Bear with me.
Which computer, which monitor that
So I'm
you
up
want.
here on my control panel, right?
Yeah, so it says show screen.
People can see your screen. Click by stop sharing, that one.
And then just there's a little drop down. You should be able to click on and choose what screen you want to show.
Okay. Let me see here. Let me see. Okay, I'm looking at that. I'm looking for that screen share. Hold on one second. Change presenter. Okay, stop sharing screen. I just pushed that button. You saw that I stopped sharing my screen. Well, this is what I'll do. That's okay. I'm gonna move this over here. I'm gonna move this over here. Can you guys see that okay, John?
Yeah, it looks like an inbox.
Yeah. It's just got 3 different statements that I pulled. All right, so everybody, just so you know, I pulled 3 different statements that for this quarter. I'm not going to go back any further because it's pointless. I mean, last year we saw phenomenal returns. I could show you some brokerage statements. We actually have a client that's going to be on the webinar today, but we could go back all the way through the last 5 years, and we have some phenomenal statements all through that period of time. If you want to see those years, give us a call after this webinar, and one of my account managers can take you through that process. But I'm going to show you what's been going on this year, because this year is really a focal point for everybody. Everybody's a little scared, and which we all have the right to be, because the markets have been a little chaotic. But I'm going to take you through a snapshot of 3 different account sizes, different portfolio sizes that these clients have been trading, but just show you what's been happening this year. And I'll show you what happened yesterday. I have a statement that goes through yesterday. So this is going to be from one of the brokers that's trading it through Dorman Trading. And like I said, this client chose to, him and his wife, set up a joint account. And this is their direct account statement that they sent us. And I'm going to zoom in a little bit so everybody can see this. So this was just middle of March, okay? And it was a daily statement. You can see that here, okay? And this client here, I believe they're trading the 12, I think this might be the 12 market basket. It looks like at the 9, between the 9 and the 12 market basket. But what I want to show you here is down here at the bottom, before we get into the trades, is you can see a beginning balance here of $66,385.27. That was the daily beginning balance, right when the market opened, okay? This is going to be a statement that's going to run through the whole entire day of what happened that day with this person's account, and at the end of the day, when the market's closed, where his account was at. So they pulled the statement. You can see here, it's all through Dorman Trading. So it's an actual brokerage account statement that they sent over. It's going to go through their open positions. Anywhere below this asterisk line is going to show you the open positions. We do have a couple of small debits. They're not really that bad, $55, $70 here. But what we want to show you is some of the trends that the turtles caught. And all three of these statements, the biggest thing I want you to focus on here, not what the basket size is, how much money they're trading with. What the focus here is the trends that we're seeing currently right now in the commodity sector. And John, I mean, what have they been saying about the commodity sector for the last 4 or 5 years? We're in a commodities era right now, right? And everybody should be trading commodities. What we have here is you'll see a long column, a short column. Over here to the left is the trade date. That's when Turtles entered the trade. And it's going to tell you what the contract description is, which is the market, the price, and if it's a debit or a credit. So a debit's going to be a loss or commissions or a withdrawal. Credit's going to be a deposit. It's going to be a profit, or it's going to be an adjustment to the account. Okay. So 5-year notes, we got 2 contracts long on 5-year notes. We're short lean hogs here with 1 contract. Feeders, 1 contract long. You got the E-mini gas, 2 contracts on that. Crude oil, we're short crude, 1 contract there. S&P 500, we're short 1 contract there. And we're also long 2 contracts on the euro dollar, okay, the mini. All right, so in here you can see a debit is DR, and these are profits. So you got $1,200 here, might as well call that $1,300, $1,800 here, $16,000 on the ES trade, and $4,300 on our euro trade. So total open trade equity is $23,950.62. If this client, this is where it goes back to what I mentioned earlier, if you're trading at the broker and this is done for you, because this is broker assist, where we call it's an LOD, letter of direction. John and Kim have given Dorman Trading and Zytrade letter of direction to trade the Turtle system for them on their behalf, okay, according to the Turtles rules and according to the portfolio baskets. So if John and Kim at the end of the day said, hey, I'm done, close my account, close all my positions, 23 grand, $24,000, actually close to 24. I love that profit. I'm going to stop trading. That's their choice. They can do that. Okay. You have full control of your account. So that was some of the trends we caught in March. I am going to go into this statement here. This is one of our clients trading at, and this is kind of nice because you will see a couple of different brokers here that are executing. This client's trading a little bit larger of an account, and this is actually taking you through this whole entire quarter of 2025. So we have top right-hand corner, January 31st, which is going to be all the trades for January. You got the monthly commodity statement, redaction here of all their personal information. This one's traded at RJ O'Brien. All right, this is going to go through, because he's trading a larger account, he's trading a bigger basket size. So I think he's trading the 21 market plus. He might be trading a little bit higher than that, but he's trading high-grade copper, Canadian dollar, orange juice, E-mini crude, which is in the smaller basket as well. Soybeans, gold, that's in the smaller basket as well. It's in your 9 market basket. Japanese yen, cattle, soybeans, wheat, Canadian dollar, and we'll just keep going through. Nat gas, I mean, E-mini gas starts at the 4 market basket. So a lot of these markets start and will be traded in most all the basket sizes, okay? All the way through, and you're gonna have losses, everybody. We'll just go through and look. Here we got, $2,200 on the high grade copper. This was a closed trade loss because you'll see one contract. They closed high grade copper with a loss. That happens. $2,400 here, $1,800 here. And if you continue to go through, I am gonna just focus on the losses, everybody, just so you can see. $2,500 here, $1,800, $2,300. You're going to have these losses throughout the month. Same thing with your option contracts. When you're trading options and stocks, options on stocks, you're going to have various different losses throughout your day, whether an intraday trader or you're hold a little bit longer than that. You're going to have your losses. And really what matters is what happens at the end result. It's kind of like when you buy a house, right? You buy a house, whether your equity goes up or down, really what counts is when you sell that house off and you're going to be more profitable or less profitable, depending on where the market is, right? Same thing here with commodities. We really don't focus on the day-to-day. We look at what happens on the month to quarter with turtles, okay? So throughout the whole entire month, you're having these losses. You're also having some nice profits. So at the end of the month, what you're looking at is they started with this particular client at the beginning of January with 210,000, all right? They had closed trade profit, all right, of just $1,000. So with all those losses, the profits that they made at the end of the month outweighed the losses, and they actually ended up with $1,000 profit in January. They also had some open trade equity. This is going to be right here, 7,882. That's going to be these profits and losses combined, and that's going to give them an overall account value at market at the end of the month, $219,000. That's going to be their take-home closeout trade equity. Same thing goes here with through February. You got your February 28th statement. That's going to go all the way through. I'm going to take you down through the end result here. The beginning balance 211. They actually closed 4,600 in net profit here. Their net futures profit and loss total here with their open trade equity 6,400. So they do have a lot of trade equity here that's open. So account value at market 222,000. And then we're going to go all the way down through March here. And if you look at March, which is just last month, we're going to see what their total account value. They have a lot of nice profit going on here with orange juice. Cocoa is up 13 grand, but at the end of March, they had 31,000 in open trade equity here, and their account value at market, if they closed, was 250,000. So they went from 210,000 at the beginning of the year to 250,000 at the end of first quarter, at the end of March. So it's about a $40,000 profit take home if they close their account, okay? That's a pretty nice profit for first quarter, I would say, all right? Now if we close this, and let me take you into a smaller account, and this is based off the 9 market basket, and we're gonna go into here, and like I told you before, you have discretion. So this is another account. This one's traded at Dorman Trading, and this one's actually unique because this is an IRA account. The other 2 accounts I showed you were based off cash. Those were cash accounts. This client here decided to set up an IRA through one of the custodians, which is Equity Trust, which was one of the largest here within the United States. So their IRA is traded over at Dorman through Zytrade. Monthly statement, January. They ended up deciding, and you can see here, here's their wire in credit, all right? So they wired in 29,750, and because this is, you can choose your basket sizing, technically they should have traded according to the Turtle portfolios, the 6 market basket, but they chose to trade the 9 market basket, a little bit more risk on their IRA, all right? So if we go down through here, trading through that month, their beginning balance was 29,000. You saw the wire in. And this month's activity, they had open equity. They have about $596 in loss here. And then they closed trade profit was $2,959.97. All right, if we go into February 28th, month to month, which goes through all the trades with you, all the way through February. Here's their beginning balance because of their profit they made. They did take a loss this month. That does happen. This is $3,785.64 on this month's activity. They had an open equity because they have some losses here on the Dow. They have some losses here on the nat gas that are greater than their lean hogs and 5-year note profit, all right? So February was kind of ugly. That's going to happen, right? So we have to trade through the bad times to see the good times. They stuck through it. They didn't freak out. Their account dropped down to 28,000, and they're glad they did, because all the way through March, I'm just going to take you all the way down through all the trades, because we do have limited time on this webinar. We're coming up on the hour. We've got to bring in the trader and as well our client. But here you go. This month's activity, 15,000. They ended up with 48,000 in their account value. That's at the end of March. So they went from 29,000, their account sits at 48,000. And what I want to show you is what's happened this month so far, because I do have their daily statement from the 8th. They closed some pretty big trades. And what we're looking here is their account balance, ending balance here. We'll look at their account value at market. $63,490.87. This month, they closed some pretty big profits on some of the trades within the 9 market basket. So they went from 29,000 at the beginning of the year, small account, 9 market basket, and they're sitting at 63,000. That's all the way through the chaos, through the markets, what we saw, the Dow drop, the S&P, the stock market, everybody's freaking out on all these tariffs, where the Turtles they don't flinch. So this is the type of trading that Turtles is, because it's mechanical, it's rule-based. They don't have emotion get involved. They follow the rules. The rules picked up those trends, and this is the profit that they saw. Okay. All right, John, we're coming up on the hour. That's it for me on the account statements and showing everybody what's been happening this year. It's been pretty exciting. Everybody here is excited. We have a lot of clients that are excited. I'm excited. Everybody on this webinar should be excited to see that type of return, and us showing you with FFR actual client brokerage statements. There's not too many people out there that they're going to show you, a lot of these gurus on the internet are going to show you, here's a trade, this is what I did, maybe this is what I did this week, this is great. But what we're showing you is the down and dirty. We're showing the good, the bad, and the ugly. We're showing you what's happened all the way through this year. It's been phenomenal, and we're all excited. We're excited to see what Turtles is going to do this year. So, all right, John, go right ahead and take over. You got the screen?
Yeah, absolutely. Great stuff. Yeah, you should be able to see my slides back here. And guys, you can always give us a call, put up the numbers later if you want to go through and see more brokerage statements from clients going back years. So at this point, I want to bring in Jeff Davis. Jeff, if you would, maybe just tell us a little bit about your background and your role here with the Turtles.
Sure, John. Can you hear me? Okay.
Perfectly. Yep.
Okay. Yeah, I'm the program manager.
And tell us a little bit maybe about your background with Russell as well.
Yeah, I first met Russ in the early 90s at a convention for traders. And at the time, my father was a pioneer in programming trading strategies, and several of his associates were speakers at the event. And that's when we were introduced and we began to work together.
And, a lot of the clients have questions about how the alert systems, work. How does the alert system for the Turtles Commodities program work?
Well, the system has been in production for decades, and it's purely mechanical. The methodology is based on algorithms programmed into a scanning platform. And these algorithms generate a report that we send to members for managing their positions.
And what kind of technology and infrastructure do you guys use to ensure the reliability of the trade alerts?
Well, we have state-of-the-art computer stations with access to several trading platforms and live market data. And our office infrastructure has multiple internet services and a backup electrical system.
And what challenges, if any, do you face, in your role, and how do you overcome them?
I've been working with the Turtles program for most of my life, so managing the system is simple.
And the alerts, so that you know, the end user, when they get the alerts, how user friendly and easy are these for members to understand?
After the market closes each day, we generate a new report and save it to a PDF file. The report is color coded and formatted into sections, so it's easy to read and understand.
And any, you know, improvements or updates that you plan to enhance the user experience?
No, not this time, but we're always open to improvements based on user experiences and their input.
And I know over the years, I know Russell made some tweaks to the original Turtle strategy. How do you see the role of technology evolving in the Turtle trading strategies?
Well, as technology evolves, so do the vast numbers of investors. So that increases the volume, and it also increases the percentages used to forecast market moves.
And what advice would you give to members, especially new members, on maximizing the use of the alerts?
The first step for every member is to educate themselves by watching our educational videos and reading the manual. This will answer many questions and provide insight into the trading methodology.
All right, fantastic. And anything else that you'd like to share about the Turtles Commodities program?
My suggestion is to focus on long-term trends, and of course, losses will occur, but the big money comes in from writing out a trend. And the Turtles program has stood the test of time, and following trends is what it does.
All right, fantastic. So those of you, hope you appreciate, you know, Jeff, kind of that unique insight to the inner workings of the program. So thank you, Jeff. Much appreciated. And we'll probably hear from you again at the end before we wrap up. So don't go too far. Let's get into some reviews, some client success stories here. This is one of my clients, Captain J. He's got a great story. He was a long-term Turtle subscriber even before I came here. He is a captain of, or at the time was a captain of one of these oil tankers, goes out to sea for months at a time. He had signed up with the Turtles and some other programs, and saw some losses initially and kind of buried his head in the sand, according to his admission. And a couple years later, his program was set to expire, and we were trying to contact him to see if he wanted to renew or what he wanted to do. And I finally got in contact with him. I think it was around end of 2019 into 2020. And he said, look, I'm so sorry. I checked out, and I said, I know I lost all my money, but I'm ready to kind of plug in and restart again. And I said to him, well, you know, actually, you know, I think he started with about 75,000 at the time. And I said, you've got about $220,000 here. And he, you know, just about knocked him over. So of course he resubscribed. We got him set up. He's actually a lifetime Turtles subscriber, and started with paid some bills off or whatever he had to do, and left about $130,000 when he started in, I think, November of 2020, and at his equity high reached over 600,000. So great story there. And this is a guy that ended up getting laid off during COVID. And so, you know, this is going to give him a retirement.
And he's still trading today, right, John? He's still trading.
Oh yeah, yep. Yeah, absolutely. Keep in contact with him. He's here in Florida with me here, so he's hard to get a hold of because he's traveling so much on these ships. He's a merchant marine captain of merchant marine ships now, so delivering grain from Texas to the Middle East and so forth. So, but here's another one. This is Robert B. And all these, you can go to our website, ffrtrading.com, and you can see these posted there as well. Robert made a profit of over $24,000 within just 4 months of trading.
That was back in 2024, just to give you an idea, everybody.
Yep.
That was the beginning of 2024. So.
And Dr. Striegel here, you know, you can go through his testimony. That's also on our website, but a great story. he's been able to withdraw, lots of money from this Turtles program to supplement his income. So
Well,
some great.
he was a practicing physician that was trying to get to retirement a little bit quicker when he was, I think it was like 65. And yeah, so he made over a couple $100,000 in a couple of years and just really helped boost his retirement. So, yeah.
But last and not least, let me bring one of our existing clients here, one of our most successful clients, just a great human being, really. We're really glad to have gotten to know him and work with him, and that is Chet. Chet, if you want to come on here, and I'm just going to ask you a few questions about your experience here with the program.
Okay. Hello. I'm Chet Hahn. I started up in the fall of 2019, and unlike the first couple of statements there that had initial great success, I successfully lost 15% in the first 4 months, and did not know what I had just gotten into. But as we are here over 5 years later, I am glad that I stuck it out. My background was I was just a conservative mutual fund investor. Found out a little bit about covered call writing, options, and figuring out that it's all self-learned. I have no formal education in this at all, but I quickly found out that I don't know what I'm doing because of that. So made some mistakes, but realized that a diversified portfolio is where you've got to cover all your bases, just from very conservative investing to extremely risky. But that risk, what I really enjoyed about the Turtles is that it is a defined set of parameters. It takes the emotion out of it. You can be as hands-on or as hands-off as you want to be. Life gets in the way sometimes. There were months that went by that I didn't even look at the statements, and there was a while that it did nothing. It was like, why am I doing this? Well, nope, it's the long-term results. It's the losses hurt, but the gains have been phenomenal. I don't say that lightly, but it was surprising that I basically started with $65,000 in one of my cash accounts, and it was over $500,000 in 5 years. So yeah, the COVID year, that was probably definitely an abnormal. So very happy to have been able to ride that roller coaster, but that is the definition. It is a roller coaster at times. So if there was anything that I was really impressed with is the ability to contact and talk with the FFR people. They're always there. The philosophical part of this is back to my initial infancy of it. I was only just a long investor, but I realized there were ways to take advantage of the positives and the negatives. So being long and short, but I just did not have any wherewithal on how to do that. The Turtles, I believe in it. It's just, I am going to be doing this for as long as I can. As long as I have my health and I have my mental abilities, I am going to be doing this. So that's what I've got.
And Chet, so what would you, or maybe what advice might you give somebody who's thinking about joining the next Turtle Trading Challenge, but maybe he's on the fence?
It's a big step to come out of a conservative mindset, and it's exposure to risk. So I will always go with, I'm very thankful that I did make that choice. That is just a simple, I'm glad I did it. I'm glad I am still doing it, and I am thankful for this relationship over these last 5 years with Michael and John.
And any advice, Chet, for new traders just getting started with the program?
it is, I won't say it's overwhelming, but having zero expertise in commodities and being fully exposed to commodities and that volatility, it is an education. So it is definitely allowed me to learn more about how money works. I mean, it used to be a magical thing, but now it's just like, no, just follow the trend, and that is, it just couldn't have been that simple, but it is that simple.
And finally, I just want to kind of ask you, how has being part of the program changed your life?
It is taking a level of stress off, which is, it's money, to think that, okay, this has been successful enough to temper things going to, I'm 60 years old now, and so the retirement horizon is in sight, but it has now been able to temper that, because it's so a volatile trading platform, its success has been able to temper, okay, approaching retirement years, those dollars are now there that weren't there 5 years ago, and I wouldn't have thought they were going to be there 5 years ago. So.
Well, I want to say too, Chet, thank you so much. And it has been fantastic working with you. And I think we're lately, over the last several months, we've been more hands-on with communicating, which is great. You travel quite a bit because you're an international FedEx pilot. And so you don't have any way to trade this on your own. So you're actually, talk about, just so the audience knows, talk about the experience with your broker-assisted account, because you really don't do anything, right?
Correct. So that was the hands-on, hands-off-ish ability of this system. Is I've just been in China, and the Chinese just don't like you to be able to communicate very well with the outside world. So I am very thankful that the Turtles have access to the brokerages that do this for me. I don't have that expertise. So yes, and it's very simple, as easy as the communication is with Mike and John. It's just as simple with the brokers also. They're an email or a phone call away.
And then your commissions that you pay the broker compared to the profits, is there any comparison there? Do you have to worry about that?
That has never been, I mean, rarely have I ever had an absolute yes, no, black, white decision or statement of any question, but commissions are it's a sunken cost of doing business, and I have never even noticed, oh my gosh, I can't believe they're taking some of my money to make this trade, when the result is good. And good is a relative term, but the results have been good.
That's okay, Chet. You can say great. That's all right.
Okay.
But thank you for that. I appreciate that. And thanks for, I know you're in Alaska right now, right? So
yes.
Thanks for taking some time. And I know you just flew in last night, and I know you're running on just a little bit of steam, a little bit of gas right now. So thanks for being here today and making yourself present. So thank you very much.
You're very welcome, and thank you for what you guys have done.
Thanks so much, Chet. Thanks so much. All right, guys, let's take a moment to review everything that comes with the strategy. Again, a summary of some of the stuff we talked about, the access to the complete Turtles video series, that workshop that Russell Sands recorded, I believe it was in Australia. I think there's 7 different videos that come with that. Access to the comprehensive details to learn the rules and the methodology, all at your fingertips. Obviously, the buy and sell alerts for over 40 different commodities and markets, depending on what basket size you're in. And as Michael talked about, and Chet just talked about, access to third-party registered brokers. If you don't want to do this yourself, it can be done for you by the broker at your with a letter of discretion. And again, access to us here at FFR Trading and the support that we provide.
And John, I want to also say, and the audience, I just want to let you know, we do not promote any brokers or auto trading whatsoever. That's purely your choice. It's just an option that's there for you if you don't know how. They're receiving the signals. They've been receiving it for decades, and they're just there to help you execute your account. If you have your own personal broker that can execute trades for you, we're more than happy. The Turtles can send the signals to your personal broker. And this is out of all the systems, it's something that you don't have to watch all the time. You can self-trade this fairly easily as well. Okay, so go right ahead.
All right. So, Michael, do you want to talk about the partnership that we've created here and how they can participate and be one of the 14 new turtle traders for 2025?
So yeah, so we are looking at, and the reason why we look at, and the team, the trading team looks at bringing on a certain amount of individuals. It's purely just because of management. They want to manage the current clients, make sure they're up and running, they got all their questions answered, and we're helping them. On our side of it too, we're helping you work with your account and your trading experience. So we have our monthly reviews. So if we take on and we open this up for hundreds of people, it bottlenecks us on our side with our time management. It bottlenecks the trading team. And then on top of that, we do, even though all of the futures that we trade are very, very liquid markets, right? But the thing of it is that you do have the market makers like Goldman Sachs and all of them that if they see certain positions moving in one direction in a large volume, they can buy up some of those contracts and move the market. They have a lot more money than we do, but they can move the market one way or the other, and that limits our opportunity as well. So we do want to take on 14 turtles right now. We ran this several months ago, back last year, late last year, and we want you to come on board with us and partner with us, just like Chet and Burke and some of the other clients that we showed you and the statements that we showed you as well, and give you an opportunity here to start making some money and diversify your portfolio. The turtles are expensive. This program is not a cheap program that you see on the internet. It's 30 years of success, and it's not a cheap system. So we are going to give you an opportunity to come on and partner with us. You can move to the next slide, John. That's fine. We're looking for, these are our partnerships, and this is what we ask for clients when we're looking at certain partnerships and availability. We ask you to do a few things for us. If some of you that are on here on the webinar that are a current client, you understand this. Like you agree to a partnership and move forward, we're able to give you some bigger discounts because you're going to be providing us with some materials here that's going to help us promote our company. And we want your turtle story. We want you to send your monthly brokerage statements. We want you to commit to at least a quarterly meeting. We can meet more than that, but at least a quarterly meeting. Testimonial of success, like you've seen here in the webinar. We have a 4.6 star rating with Google. We have an A+ rating with the BBB. We have a lot of testimonials and Google reviews that praise the way we handle our clientele and the success that we bring our clients, and refer some friends and family. That's what we're looking for. All right, John, you can go to the next slide. So yes, you're going to get sticker shock. The corporate lease is $20,000, but for individuals that are serious, that are really truly serious, we're going to allow you some significant discounts for the 14 partnerships that we're asking for. So we're looking at greater than a 50% opportunity here below the corporate lease of a discount that you're going to get. We're going to help you make this affordable, okay? Because if you are serious and you want to change your current situation, right, Turtles can help you get there. I mean, you saw some of the results. I mean, we just literally closed 2 days ago. The Dow Jones trade was over $12,000. On the short side, we closed over 20 grand. Chet just made 20 grand on the S&P 500 on his account. on Monday when we closed that trade. The NASDAQ trade, that was $33,000 for one contract. So charging 20 grand on the Turtle side of it is really worth every penny. And because of the results that it gets. I mean, Chet's went from, he's made over 600 grand for his retirement. That's worth every penny. But we're going to be here to help make this affordable for you. So call in. If we need to take you through some more broker statements, we can. We can take you through the history, but let us try to help you. All right. And but it isn't for the faint of heart, like Chet said. I mean, you got to stomach some of the drawdowns, you got to stomach some of the losses. But if you trade through that, right, there's going to be roses, rainbows, and unicorns and leprechauns at the end of that, right? So, but give us a call and let us help you out. And the Turtles have given us the opportunity to give you some really, really nice discounts. I think you're going to be blown away. All right. But you got to take that step. Maximize, hedge your options accounts. If you got a little bit of extra money sitting on the sidelines, 20, 30, 40, 50, 100 grand, give us a call. Let's show you what we can do, what the Turtles can do with your funds. All right. So that's really it. We're here for you to help you see success, retain your business, become long-term clients like Chet and Burke and everybody that's been with us for a long time. Let us help you hit that next level in your trading. All right. John, you got anything else?
Yeah, so I put up the numbers here, Michael. So guys, you need to call us at the 800-883-0524 number. If you're outside the U.S., you can also use the 737-292-4425. If you have to, you can email us at support@ffrtrading.com. But you do need to contact us because we do need to speak to you. We have to make sure this is a good fit for you. We're not going to put somebody into a program that is not suitable for them. So you do have to call us. Let us talk to you. We're going to ask you some questions. We'll show you all, go through the whole presentation of Turtles brokerage statements, so you can make an informed decision if this is something you want to move forward with.
Hey John, real quick, sorry to cut you off, but there's a question I saw pop up from Scott Simpson. I believe he's a current client of ours that's trading Turtles. I think his name sounds familiar. Scott, if you're still on the webinar, if you have a question about that, call in. You should have recently, if you are a Turtles client, you would have gotten an email. You would have received an email on Monday evening at 5 o'clock. And it's got the portfolio baskets. It's going to describe when you're going to start to add another contract and start trading two. Once you hit that $55,000 level, there's a 2N rule that's based in the Turtles manual that you got. It's going to describe that. But if you are self-trading, you'll have to figure that out. But some of those markets are going to be low margin, and it just doesn't make sense to just trade one contract because you have a lot of funds in your account above 55,000. That's going to be at that 12 market portfolio basket. It's going to make more sense to then start trading double contracts on some of those lower margin markets, okay? If you're auto trading, Scott, if you are at one of the brokers, they should automatically be doing that. I know that clients, because you saw Chet's and some of the other ones that are trading at Dorman, they're automatically calculating that 2N value. And I know that StoneX does that as well. I'm not sure about RJ O'Brien. Okay, so if you have any questions, you can call in here, speak to your account manager, and they can go over that with you. If you didn't get that email on Friday night or the portfolio baskets, we can send you another copy. Okay.
All right, fantastic. And again, just to review, guys, if you want to reserve a spot, you want to be one of the 14, call us at the 800-883-0524 number, or the 737-292-4425 number. You get access to the complete Turtles Commodities trading system, the daily trade alerts through your email, Russell Sand's full training course, the manual, which is 400 pages, the videos, full support from our team as well as the Turtles team. and of course, one-on-one onboarding with the strategist to help tailor the strategy to your goals. So give us a call. The spots are going to fill up fast. They do every time. Again, there's only 14, as Michael said, the reasons why there. This is your opportunity to become part of trading history. You've seen the brokerage statements. If you want to change your financial life, think of what this can do to your IRA. Right now, your IRA is probably suffering, or if you have a 401k, okay, you can trade this in an IRA. The brokers can help you set that up. We can get you started, and this can literally change your financial life. But you got to call us. Again, we're not promising it's going to be a good fit for you. We'll let you know if it's something that is suitable for you or not. But if it is, like I said, it can be life-changing, at least financially anyway. Any last thoughts, Michael?
No, that's it. Just thanks, everybody. I hope everybody learned something. And, you know, whether or not if you don't do anything with us or not today, no big deal. Just give us a call down the road. If you're not really, you know, if you're not really liking futures, it's a little scary, or if you don't have those funds, we do have various other programs here trading on the options side that may be a good fit for you. We work with Chuck Hughes, Ian Cooper, Wendy Kirkland, Keith Harwood, Joe Duffy, just to name a few. And we got fantastic results. Right now, some of those guys are sitting on the sidelines because of what's going on in the market. Sitting on the sidelines is a strategy, but we may have something for you there with smaller account sizes. All right, 10,000, 15,000. We may be able to find an options program that fits your needs. That's it. Hey, thanks everybody.
Yes, thanks for all for joining us today. We hope the session gave you some valuable insight into how the Turtle Commodities strategy works and why it continues to deliver powerful results decades after it was first introduced. Again, thanks to our panelists, Chet and Jeff Davis. Thanks all for attending. And remember, if you want to be one of the first 14 to join the 2025 challenge, call now and we'll talk to you soon. Take care, everybody.